Good morning, everyone. It's 21st February 2017, and welcome to another episode of ProAMT Traders Digest. Let me go through the disclaimer first. Trading in stocks derivatives involves substantial risk of loss and not suitable for all investors. Past or simulated performance is not a guarantee of future results. All indicators, strategies shown in the video are for education purpose only. All levels discussed in this video are for understanding the study and not a recommendation to trade. Please consult your personal financial advisor before making any trade decision based on this video. We will not be responsible for any resulting profits or losses. So let's have a look at what Nifty futures did. Open within range and a push back down. Now this push down was supported by this C and D period low of previous day. The B period opens just off that lows and then drives above the open of the day. A pullback in the C period to the open, an inside bar, but not able to fetch any selling pressure. The volume was low at that time and the D period finally breaks above the IB. E period again an inside bar. Now when this was happening, a very tiring auction, but finally the F period breaks out. G period again a higher high, H period higher high, I period higher high, J period higher high. So one time framing with H period low breaking the G period low, and again an inside bar in the K period. L period again makes a higher high, and finally a spike in the M period. Now this L period low was just below the Friday highs, and there would be stops waiting just above the high. It's easier to take those stops when the levels are so mechanical. Overall, trend day, elongated profile, but if you see there are anomalies here. This prominent POC is here, not so prominent, just seven periods traded there, but still it's an anomaly. M period anomaly, and again H period and the C period. So a lot of anomalies there during the day. Now let's have a look and see what happened on the 1 minute chart. On the 1 minute, if you can see, there was a channeled move. A channeled move down was underway and leaves that channel, breaks out, makes this high and comes back. Now this has set the tone by not pushing through this balance. When it didn't push through this balance, the tone was set that it wants to do something else, and then entire day channeled move up. Now spikes coming in during the day. Let's see what happened in those spikes. So this is the first spike coming in above the initial balance high. So any first spike coming in and retracing back is a sign that it wants to go up. Again a second spike coming in at the previous day value area high, but none of these spikes are able to like push down and break the spike low. Now this when it pushes down, it's not able to push through this balance. If you see, there is a balance here and not able to push through this balance and continues its move up. Again a spike coming in, but the same behavior is going on repeating. Now there is a lower balance here and not able to push into that balance. So overall a very methodical auction, creating balances higher and higher. This balance, then again this balance, and then finally breaking out through that. In the end of the day, the delta was positive almost throughout the day with bit of negativity here. There's this negative zone but not able to push, so the price action is not confirming this negative order flow. During this spike, the last spike, there is a bit of selling, but let's see if that's visible on the 15 minutes or not, because there was a lot of momentum. Now on the 15 minutes, buyers getting stuck here, coming down but no supply. A no supply bar, breaking that but instantly pushing in and then making a move higher, closing above the highs of the no supply is demand. And important zone here 8850. So this was where it started accepting that 8850 zone. So once it accepted, see how it pushes back to test and instantly pulls back and then finally breaks out in the end of the day. Now this is a spike on 15 minutes, but due to the momentum the order flow is positive there, and any first failure signs would be pushing below this 8865 zone. Now let's have a look at the Renko. So on the Renko, we have moved down zipper here and pushing through that zipper and impulse up, pull back. This is impulse up, but zipper in between. Again a pullback, impulse up, pull back, impulse up. This impulse is falling short and then a grinding move above the high of the previous day, leaving a huge LVN here as well as just below the day mid. Now this becomes an important reference. So it's a pullback here, a zipper just below, and there is a nice LVN to lean upon. So this would be a good sign, because after this HVN, the acceptance where the highest volume had traded on Friday, we have a LVN just above that. So becomes a critical zone. So any failure below this 8850 and then pushing through this and filling up this LVN or creating volume and pushing down would put us in a worry to buy this momentum, and otherwise the momentum can carry on today as well. Now let's have a look at what we can expect. Difficult to guess here because we are at the extremes of the range, and there is no way to predict, but still we are just watching what would be the likely scenario. So you draw one here and another one here. So open anywhere into this, or suppose if it opens gap up. So we'll draw the scenario for all these three openings that it pushes higher, goes above the high, and in case it opens directly above the high, then also this is applicable, that it pushes into the 889095 kind of zone, fails, comes back to test this HVN, and then again pushes through the highs and carries its move up above 8890, and then above 8900 there is the only thing we can lean upon is 8949, which is the VL of the highest micro composite balance of the previous swing from where it had started falling. Now, in case it starts pushing below this 64, then push into this LVN, reject here, and again make its way into this higher LVN and push through that into the HVN, and then again carry this move. So come test back and then pull back up. And in case it starts accepting here, then push through the 8820 zone. Now this scenario is likely only if it now don't know what can the first initial morning session give, but maybe morning it might want to keep rotating in between this zone or even rotate above the range. And in case any afternoon selling, because US markets were closed, and after the European markets open, there may be a reversal auction which might play out into this zone. So in case if it fails to hold this, then expecting it to push through and come towards 882523 kind of zone. If does not find any supply here, then pull back up or else start drifting lower. So that is what I'm expecting in Nifty. Now let's have a look at the Bank Nifty. Open within range again, and directly a open drive, pushes higher, and then C period inside bar, but D period breaks out, creating value above the initial balance into this previous accepted zone, trying to resist there, but finally a spike in the M period. So overall this is becoming a balance, a nice balance on the lower side. So might want to fill this entire area and then decide where it wants to go. Now Bank Nifty is trading against all-time highs, and a lot of momentum is still there. Now on the 1 minute chart, this it was carrying on with a channeled move and continued the move from yesterday. Let me draw a line there. So this is looking like a channel. So a nice channel move continuing from Friday from the lows, and then breaking out of the channel, coming back and taking support of the upper trend line of the channel. The delta was negative in the beginning, goes positive. All it required was some positivity into this, and see how it pushes. All this push is with positive delta, and this push helped it go higher and went to the previous day volume area of value area high. Now this is like moving to exactness from the value area low till the value area high. Now there is always a race to always like analyze that to the tick that our analysis is getting followed. But I'm a bit different, and I actually am not in favor when the market is behaving to the tick of the value areas. That means it's very mechanical, and everyone can see this. Anyone who has this software can draw these levels, and I would not take this as a very strong auction, because a strong auction would not behave like this. But because there was momentum and trading in a channel, so it kept on going higher. We do not try to go against this auction, but at the same time we need to be cautious when it's following precise levels. Now on the 15 minute, again the same thing. The buyers drop at the highs, so but there is no supply as well. So till there was no supply, it went on moving higher, 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 though the momentum delta was going negative, but the price was never able to push down. And finally, the when it came back here after this rise, stuck buyers at the highs, and when it came back into this negative bar, a lot of delta was created, and so this dip was being bought. Finally that low is also broken, but again all the supply is absorbed. So when it came into the previous day VWAP, there was supply coming in, but entire supply absorbed and goes and closes. If you see this close, it's into this range as well as above this range of the supply. So due to this momentum and the lack of further supply, it pushed up higher. Now towards the end, it has got a spike as well as selling coming in, and that those can be cover orders coming. Intraday buyers would be exiting, so overall must be profit booking. So here a zipper and a very confused auction, but tick failure here of the morning lows, and then pushes into an impulse pullback. Impulse, this impulse falls short, comes back near the lows of this previous pullback, and then a zipper here, cross of the zipper, impulse goes sideways, then a symmetric move up. But these impulses are not good, but because the stop losses become like way far, so it goes this higher, and then if we keep a stop loss into the zipper, it would be taken out. So difficult move based on the rotations. But on the other hand, very symmetric. So comes down, pulls back up, makes a higher high, again makes a higher low, higher high, higher low, and then goes sideways, creates this entire balance, and finally breaks out in an impulse. So if this impulse, if this is auction continuation, then today we might get the rest of this impulse in the morning. So let's see the scenario for today. So again the same thing, expecting open into this range. There is a LVN here, major HVN here, and then we draw any levels of the highs. So in case it opens here or here or here, so anywhere it opens, then expecting a push into the 720 730 zone, look above, fail, come back into this HVN, instantly reject and make its move higher into the 20,800, and then if it gets accepted, then keep pushing higher into the 850 and 900 zone. In case it opens anywhere, and we'll continue with this, that it fails to hold this, then come into this LVN, and here also it can reject and do this, continue this move. If it rejects here, then push into the 2590 and start rotating into that, and either create demand here and push higher, or create supply here, keep distributing and push lower into the lows, and then finally into the 2470 kind of zone. Any acceptance below that would make it go further down. So that is what I'm expecting for Bank Nifty for today. Before ending, let's have a look at the sectors, what the sectors did. And also what the stocks did. So that spike was led by TCS coming up with a buyback, and all of a sudden from if you can see this, it was trading like around 1% higher from the open, and all of a sudden spikes to 5% and then settles at 3.46%. The other one which rallied is just behind this. So let's see, what is this? Difficult to get hold of that. And Axis Bank and Idea, the major losers, but I think these are the heavyweights, TCS and Tata Steel and HDFC Bank all rallying hard, and that actually drove the auction for the day. Now let's have a look at the sectors. So Bank Nifty making intra gains of 3% from the open, and then pushing down. And auto, sorry, need to do this for one day. I was confused that Bank Nifty never went up that high. Then okay, so here it is. Metal rallying hard, continuous move up, intraday gains of approx 2.5% and then settling at 1.90. IT rallying in the end, led by the buyback of TCS, and overall all the rest of the indices just in the almost in the 40 to 1% range from the open, with the pharma closing in negative minus 0.25. So apart from pharma, all are positive, and FMCG is losing momentum, so we'd expected the FMCG would continue its move down, and so this is weakening. And again the same thing, if I see any weakness in the FMCG, I would like to sell the FMCG. On the other hand, the metal is again rallying, and would keep a watch on the metal, that if it's creating a balance and failing, then we'll again sell stocks from the metal sector. Now against that, we'll need to find what we can buy, so that we'll have to check during the day which sector can show that strength that we can buy the stocks from that sector. So that's it for today, and have a profitable trading day ahead. Thanks for watching.